Welcome everyone to the webinar, Not Your Parents' Accounting Firm. My name is Fady Hawatmeh. I am the founder and CEO of Clockwork. I started Clockwork after running my own outsourced CFO consulting firm. Clockwork was really born out of that because I could not find a solution that could get me out of spreadsheets while still providing my clients advisory services. I'm a finance and accounting guy. I grew up working in my dad's restaurant. I went and got a job in corporate FP&A and strategy at Boeing. After Boeing, I went into oil and gas consulting. After oil and gas consulting is when I started my own outsourced CFO consulting firm. And that's where Clockwork came from. Let's jump into it. So one of the biggest things is when you look at the kind of the agenda of what we want when we say not your parents' accounting firm. Clockwork, we want to make sure that we're walking through what advisory actually is. So simplifying advisory, we're going to walk through pricing and packaging and being super tactical. That the end of this webinar, you're actually going to have things that you can implement literally today, this afternoon. We're going to walk through what scaling with technology actually looks like. How do you do it? Some action steps and implementation. Again, super tactical. And then if we have time at the end, we'll leave time for Q&A. You can also submit questions through the chat, and we'll try and work through those as well. So defining modern advisory. So when you look at advisory services, like core services that drive the highest value at the highest margin, that's what really modern advisory services look like. So it's always the forward facing, like the future facing type of stuff. It's an ongoing motion of what advisory services needs to be because your clients all need them. Our clients, all of our clients are always asking about advisory things that can help them move their business forward. That's really what it comes down to. And every single accountant, every single person in this profession is doing advisory services already. It's just a different caliber with a different umbrella and different name. And now really moving into modern advisory services is where we get into an ongoing motion where it's regular and it's expected and clients actually know what they're getting and we know what we're providing them. So it really kind of the biggest shift is becoming value-based in your pricing. So historically, an advisory historically has always been more transactional where it's kind of project-based. Someone will come to you and say, hey, I need to go fundraise, or I need a financial model, or I need a budget for this year, or we need quarterly reporting, or whatever it may be. And it was very kind of one-off type of advisory. Now, value-based pricing has lended itself for each and every one of us to serve as a strategic partner, not just a commodity. Because if you think back and you're actually building just a financial model, you're a commodity. You're giving them an Excel sheet. I did it all the time with my clients. I was literally building them a 5-year financial model, a 52-week cash flow forecast, and it's a one-time thing. They come in, they get the value, and then they leave. And then the next time they'll just go find someone else that can build them a financial model or a cash flow forecast. And they think it's all apples to apples. What value-based pricing allows you to do is really serve as a strategic partner where you're not just giving them a point solution. And really, advisory, you have to be leveraging AI and automation and AI and technology to really scale without having to add a ton of headcount. That was always one of my biggest breaking points is every single time that I would hire a new team member. I scaled my firm for about 5 years. I had 8 employees. Every time I hired someone, it wasn't that magic unlock that I kept looking for and trying to find. And when you bring in consultants to try and do stuff, you know, at Boeing, we always had a saying, you hire a consultant to tell you the time, but they end up just telling you that you're wearing a watch. And we want to shift away from that. We want to be the value add that our clients are asking for and what we know we can provide them. So what does the actual future for advisory look like? Like the one thing that I want to make sure is it's not all doom and gloom. I see way too much out there, kind of the scare tactics of AI is going to replace accountants, technology is going to replace accountants, accounting, that no one's majoring in accounting, and the industry as a whole is a lot of negativity around it. It's not all doom and gloom. It's actually phenomenal. It's never been a better time, a more advantageous, more opportunistic time to be an accountant, to be a bookkeeper, to be a controller, to be an outsourced anything on the accounting and finance side. The key that's making this shift is the fact that you look at the traditional accounting market, the traditional accounting model is genuinely under pressure from a couple different angles. You have automation that's commoditizing all of the compliance work. Bookkeeping, there's 20 million softwares that are out there. QuickBooks Online rolling out their own AI, QuickBooks Online Assist. Xero has the exact same thing. I think they call it Jax. There's all these different solutions that are automating bookkeeping work. So all of that is being commoditized. So if you're still out there and you only run or you only provide bookkeeping services, it provides an extra layer of pressure for you to try and differentiate yourself, explain to your clients that you're different and how you provide things that are different. That's not just technology, but you end up getting stuck in this race to the bottom with technology. Nothing will ever be cheaper than automation for a technology. We doesn't matter how many hours you put in or how many hours you don't put in, that's always going to be a blocker. But then you also look at clients are asking for more and more and more. When I was running my firm, my clients would think that I only did as an outsourced CFO that I would build them a model and a cash flow forecast. Then they start asking about headcount planning. Then they start asking about scenario modeling. Then they start asking about the KPIs. Then they start asking about reporting, and just more and more they kept asking. But now it's very, very table stakes that you offer all of that as an advisor, as an outsourced accountant partner or an outsourced finance partner for all of our clients. They expect more. They need more strategic guidance to move their business forward. And if you, as their single source of truth, as the accountant, kind of the person that they go to or they think that they should be able to go to, can't offer that next level service, it's very easy for them to just kind of look elsewhere. And so you look at the crazy kind of statistics, like 79% of accountants report that clients demand more business advice. Like that's an insane statistic. It sounds made up. 79% are saying that their clients are asking for more strategic advisory work. And a lot of times we don't have the time or the energy or the focus or the expertise to be able to provide it. So really shifting from all the compliance work into modern advisory is what the future is going to look like, and the opportunity is there, right? The opportunity for CAS. Everyone wants to call it CAS. This is, going back. People didn't know what CAS actually meant. It was, client accounting services, client advisory services, client accounting advisory services. There were all these different things, and I think we finally landed on CAS as the solution. But that is the future. That's what is standard. That's table stakes for offering any sort of accounting solution, any sort of accounting services for clients is CAS. And it's really a transformation from the market and the opportunity leading into CAS. And it's the role of data-driven decision making. Like your clients will always come to you and expect a good answer, or they should be able to come to you and expect a good answer on if I should hire someone, if I should fire someone, if we should raise prices, what do our margins look like? What does data actually look like? And you have something at your fingertips in real time that you don't have to go back and build a model for 2 weeks and then come back to them with an answer. And at that point, their what ifs have changed and priorities have shifted and they need to move quicker. And so us as partners really have to be on the forefront of that advisory services. So we're going to walk through some of the modules. Advisory made simple, and we legitimately want to make it as simple as possible. So we'll kind of brush through a little bit, like why advisory? What do you get? What does your team get? What do your clients get? With advisory services, it's very simple to kind of get bogged down into the kind of the flavor of the month offering, right? Advisory services a year ago, 2 years ago, 3 years ago, kind of seemed like a flavor of the month where everyone started saying, oh, they did advisory, but there was no clear definition of what advisory is. I think the industry as a whole has shifted into actually a clear understanding of what advisory is. And you're getting all these things. You're getting better margins. You get to make better margins. You provide better service for your clients, and you don't have to work less for them. When I was running my firm, it would take me probably 20 hours to build a financial model and a cash flow forecast. And that's just a one time, single point in time financial model. And I would charge 5 grand usually for that, just for the financial model and cash flow forecast. Now, with software, you can get that and much more in literal minutes. So you don't have to charge less for that now. You can still provide the exact same type of thing, but you're not spending 20 hours. You're not spending all that time in spreadsheets and in Google Sheets doing the stuff. And it allows you to scale your services per employee, per team member. You don't have to go and hire 10 more people. For me, I had to hire more people because we could probably max out at 12 clients per outsourced CFO. Now, with the future of advisory, you don't have to do that. So it legitimately gives you a pretty significant growth opportunity, and it future proofs your firm. There's going to be a mass shift, and you guys have already seen it. We've all seen it on the lower end transactional commoditized services. The shift to commoditized advisory services is going to be a much steeper hill to climb. That's going to be an extremely difficult thing. I genuinely don't think you'll ever have some piece of software that will completely replace what advisory services look like. Because you need human expertise, you need that human knowledge, you need that positioning of all the experiences that each one of you provide. And automating that is a very, very difficult thing. Much more difficult than automating bookkeeping or automating month-end transactions or updating actuals. And the biggest thing is like you're getting off the hamster wheel of constantly looking at the past versus the future for your clients. Historically, accountants are historians. We don't want to be historians. We need to shift accountants from being historians into being futurists. And you're actually looking at the future with your clients, and you don't have to live deadline to deadline. There's so many times where every single time it's like, okay, I have the February 15th deadline. I have the January 31st deadline. I have the January 15th deadline. Then I have April 15th deadline. Then I have October 15th. Like every single time you're literally living deadline to deadline. And advisory services gets you out of that. Advisory services gets you to provide that next level service for your clients. So, what are the building blocks of a successful advisory practice? I think the core thing is a value-based pricing model. So, having tiered pricing, tiered clients with a monthly retainer. That's kind of that, and I'll say this probably 20 times on this webinar. That's table stakes. You need to have a tiered pricing model for your clients to be really providing advisory services for your clients. The other thing is a team willing to embrace advisory. You can't have kind of one leg or one foot in two camps. You can't have some part of the agency still working on the old school transactional and then still trying to do advisory, or standing up the advisory while being dragged down with resources on the commoditized transactional traditional type of accounting. There's nothing wrong with the traditional type of accounting, but if you want to go into advisory, you have to genuinely shift the entire firm and shift all the team members into embracing and prioritizing the advisory services. And the other thing is adopting technology as the foundation of advisory. So it's not getting tech bloated, it's being very efficient and very effective, like using QBO, using some sort of integrated payroll like Gusto, using an FP&A platform like Clockwork, using some sort of bookkeeping software. Very simple things that you plug and play and you should be up and running. And it allows you to literally turn on advisory in a much more efficient way, kind of overnight. And it allows your clients to get that value overnight as well. So now we're going to be a little more tactical into the pricing and the packaging. I know we get a ton of questions around how do you price advisory? How do you service it? I went through a whole ton of struggles on this on my own firm. And, we always talked about, like a couple minutes ago, the value-based pricing with tiered clients. That was always the number one thing. You cannot do advisory services if you're still on hourly billing. Like it is extremely difficult, I'll say, to provide advisory services if you're still on hourly rates. We work with hundreds of firms. I've seen maybe a handful of them who genuinely can do that on an hourly. The vast majority are all on the advisory. And so the problem with hourly is you literally are stuck in a race to the bottom if you're on hourly, because you commoditize yourself. And the commoditization of that is literally, if they go to you and they say, well, how much do you charge? And you say $125 an hour. The next person they talk to, if they do hourly, they're going to say, how much do you charge? And they're like, oh, $100 an hour. It's like, oh, I'm going to go with Jane because she's $25 cheaper. But if you go to a firm and they're like, we will do all of your outsourced accounting and all of your outsourced services so you can move a lot quicker, plan a lot better, and we charge you $5,000 a month, they're not going to be commoditizing you. They're not going to look at another firm, and it won't be as easy to compare apples and apples or apples to oranges if you're doing hourly rates versus the monthly retainers. So you really have to understand the value-based pricing, kind of the fundamentals that allow you to kind of be at a race to the top. When I started my firm, I only did project based, and I was started in, like I said, I did $5,000 initially. It was $3,000 for a financial model. And what what I was running into is I was being compared to all the other solutions that did just financial modeling. And then they'll come to me and be like, well, so and so software or this team in that's being outsourced into the Philippines, they'll build it for $500. And I'm like, well, I can't do $500. And so it put me into that race to the bottom. But value-based allowed me to extend the price that I was actually charging. And my clients, my retainers, I would actually introduce retainers at 5,000 as the minimum, and then moved up to 10,000. Then by the time my firm was over, I personally wasn't taking on clients for anything less than 10, 12,000 a month. And it was because that strategic partner that you get to serve, you really are on a race to the top, and it kind of flips that entire dynamic from the transactional. So when you look at kind of the pricing mistakes, the pitfalls, like I said, I started off doing and learning a lot of these issues myself. And so what we've seen in the firms now is, if you keep a foot or a leg in both camps and you have some of the firm or some of your services, and it was most dangerous where you'll do certain things for certain clients hourly, then you'll do other things for other clients on a monthly retainer. And then if those monthly retainer clients come and ask you for more stuff, you'll do project based for them as well. So then their invoice is both retainer plus hourly. So that was a dangerous thing, because you'll always kind of revert back into bad habits of doing the hourly pricing. And so it never really allows you to genuinely go into the tiered pricing. The other thing is not wanting to change the status quo for your existing clients or for your legacy clients. You've had them forever. You've had them for a long time. They're always on hourly. You always kind of rationalize in your head, well, they don't take that much time and they only pay me a couple $100 a month, or I only do their taxes and they don't actually need anything else. Have you had those conversations with your clients? Make sure that they have an understanding of the additional services that you provide without being commoditized. Because if you go to them with these hourly bills, hourly rates, you kind of come off as a lawyer, right? You go there and you're like, well, I could do all this stuff, but it's going to charge you, it's going to cost you this much per hour. It's a very easy way for your clients to say no. But if you go to your legacy clients and you tell them, you'll provide much more strategic advice, much more kind of game-changing type things to generate more revenue, increase your margins, lower your costs. that conversation changes pretty dramatically, even with legacy clients. The other thing is charging way too little. Accountants are notorious for charging way too little, especially on the retainers. And it's really important to make sure you're charging with what your value is, what value you're providing your clients. It's not just what the other firms are charging. It's not just what your clients are willing to pay or what you think they're willing to pay. You genuinely need to make sure that you're charging for the value that you provide. I know one of my client, my very first client, I generated them within my first 6 months of working together. We generated over $500,000 contract. Their initial retainer with me was $3,000 a month. I made them over 500,000 in 6 months. And I'm like, why am I charging them $3,000 a month? And I thought about it myself. I kept going back and forth and back and forth and making excuses as to why I should not increase that fee. I ended up just kind of sucking it up, going to the CEO and being like, hey, we've done a lot of really cool things. My retainer should be 5,000. They're like, yeah, it absolutely should be 5,000. And it wasn't even a conversation. So your clients, if you're really providing that strategic partner level of advisory services, your clients will be more than happy to pay that rate because they know you're indispensable. They know you're irreplaceable. And so don't value yourself, kind of a little too low because you're only doing yourself and your client more harm. So let's talk about actually building those tiers. So one of the things about the tiered service offerings is it allows you to have a predictable feeder for your clients, for the services that you're providing. It allows you to have them say they start and they don't need anything super complex. They'll start on one of your smaller tiers, and we always advocate for a three-tiered pricing model, right? Bronze, silver, gold. That's kind of the most standard, most successful approach that we've seen. What happens is you can get a client on, and if they don't really demand that much time, they don't demand that much energy, but in 6 months, in 9 months, in 12 months, they're going to need a lot more. Don't turn away that business now. Get them signed up on the bronze tier. And then who knows, in 6 months, you may be able to get them into the gold. That happened all the time with my clients. They'll come to me and they're in a fundraise. I worked with a lot of VC backed companies and they were in a fundraise and they're like, we won't be able to pay you more than 2,500 a month until we close our Series A. Then we could be at 7,500 a month. I'll take that all day, every day. And then you'll be able to really have a predictable upsell motion where it's not even an upsell. You're providing that value and you essentially invest in your clients and help them grow, and your incentives are aligned with the tiered pricing model. Then it adds a lot more diversification for your clients. You'll have clients that are super low touch, that don't require much, they don't require much strategy, they don't require much reporting or anything like that. You can literally get them plug and play on a software, and then you're not really having to do too much. You're providing that value. You're looking at their stuff every month, every quarter. It's not that big of a deal. But you'll have other clients that need way more handholding. They need you on a weekly basis to review stuff, weekly cash flow forecasts. They need you every couple of weeks to actually look at their reporting packages or look at how they can strategically sign on more clients or update their pipelines based on what the sales team is working on, based on contracts, based on projects, whatever it may be. That's phenomenal. You'll have those higher paying clients that you're working more, but you'll also have those lower paying clients that you're working less. I know I've made the huge mistake when I first started. I signed one big client and I'm like, awesome, I'm making $10,000 a month on this one client. And I would only have like two or three other smaller ones. Then that one client was like, hey, we're actually going out of business and we can't pay the 10,000 a month. I lost $10,000 every single month from that. And I had to literally, my revenue was cut by over 80% because it was super concentrated. So what this allows you to do is have a lot more diversification, not only with the client type that you have, big, small type companies, but also the revenue that you're generating from them. The other thing, and we all know about this, is scope creep. So if you don't have very, very well-defined service offerings or deliverables for your clients, they will ask you for more. and they will always ask you for more. Because if you give a client an inch, they will take 10 miles, not just 1 mile. And scope creep is a very, very real thing, especially during busy season. Clients don't understand busy season. They always know that, oh yeah, it's busy season. You have to do what you have to do. And it's always a hurry up and wait thing for us on the accounting and finance side. Your clients don't understand that when you email them asking for stuff, you need that probably pretty quickly, but they don't know that. They'll email you whenever they want. And so the scope creep on the actual delivery of the services, it's so much easier when it's a tiered pricing model. Because if you're commoditized and you're saying our hourly rates are 150 bucks, your client won't think twice about giving you just tons more work because they're like, what? You're going to bill me hourly. It doesn't matter. But if you have those tiers, it allows you to go to your client and say, hey, listen, this is the tier that you're on. It's literally like no different than going to a car wash. The car wash has all the different services, the tiers, the bottom blaster, the wax, all that. You will say, this is what you are on. This is the tier you are on. These are the services you get. If you would like X, Y, and Z, whatever you're requesting, that's this next tier. That is in the silver or the gold tier. And it's a very easy conversation. It doesn't have to be dramatic. You explain to them, this is the services. And more often than not, they'll be like, oh, I'm sorry. I shouldn't have asked. You're absolutely right. That's where I'm at. Or they'll say, great, I want that. I want to be in silver. I want to be in gold. And I want to be able to do a lot more stuff with you. And so that's really where it gives you a lot more of a feeder for upsells and saves yourself from the dramatic questions or dramatic conversations that, I mean, let's face it, none of us want to have. So the fun stuff, scaling with technology. So when we look at the foundation of technology, using technology in advisory services, you have to make sure it's efficient and effective. I'll say that probably 20 times. We've said it already. Efficient and effective. Efficient means quick. Effective means it actually does what it's supposed to do. When you look at companies, a lot of companies right now, they run into this issue where they think they need to hire a specific person to go and build them a tech stack. And their specific job is to go and build a tech stack and implement the tech stack. It's a it's it's a dangerous approach for smaller firms because you could potentially run into a lot of tech bloat and bloat as a team. Because if someone's job is to come in and stand up technology, they could come in and stand up technology. Then that is the linchpin on the technology being used. And the problem with what's happening now in the innovation, you have all these AI powered software companies coming out of the woodwork. And are they actually using, and I say real AI versus wrapped AI, real AI is actual proprietary stuff that they've built as the foundation of the software that they're using. Is it actually real artificial intelligence that's being used or leveraged? Or is it wrapped? Is it a ChatGPT, OpenAI wrapped tool? Because that's very, very easy to use or very easy to launch. You can literally wrap ChatGPT around any piece of software and all of a sudden it becomes AI powered, but you're now giving access to all the data to a third party AI and you don't necessarily know what it's being used for. So those are things that you need to absolutely make sure that you're keeping in mind and make sure you're not overthinking it, right? It's not that difficult to start using technology. And I know, analysis paralysis is a very, very real thing, especially with technology, especially with advisory services, especially with AI. And honestly, one of the easiest things is like use AI to tell you how to use AI. I can't tell you how many times. So we use at Clockwork, we use Claude, Anthropic's AI. And we'll just literally ask Claude, how do we build a certain solution using AI? And Claude will tell us how to build AI with AI. So it's really a lot more approachable just to ask AI to use AI. And then really getting started on automation. Getting started, like people always ask me, like, what should I use AI first? What should I automate first? Anything that you are doing on a repeating basis, any repeating tasks need to be automated first. Whether sending proposals, doing client billing, delivering a reporting package to your clients, delivering KPIs, delivering forecasts, automate, updating actuals. It was a nightmare for me. I was spending probably 5 to 6, 7 hours every single month, every client updating their models and their forecasts and pulling all the stuff from QuickBooks Online and building all the stuff for them, then sending it back. Automate all that. So now you can, anything that you're doing from a repeating task needs to be automated at first. Then you can get a little more fancy on all the other stuff kind of after that. But that's a very, very easy win, easy way to start for your clients. Then you look at the actual, what is Excel used for? How can you use Excel? You look at the data analytics and reporting, right? The technical stuff needs to be automated. The repeating tasks need to be automated, but the stuff that lives in Excel doesn't necessarily need to all be automated. There's a lot of unique reasons that every client needs things built in Excel, or even your firm needs things built in Excel. If using technology does not mean that it's going to be better or it's going to be smarter, if you can still do Excel and use Excel every once in a blue moon to do something really quickly, do it. There's no reason to sign up or make yourself sign up for a technology that's not necessarily going to save you a bunch of time or make you better just to say that you have technology on it. And so the real reason, the core of it, advisory services provides as much value to your clients as possible. That's the point of advisory services, and that's what technology enables you to do more effectively and more efficiently. So when you look at the actual kind of value offering, like no client, I could say this, I could probably count on one hand the amount of clients that actually analyze the financial model and the cash flow forecast that I sent them. And I would send them, I would update every single one of them every single month, and I'll send them to them. Some of them that were doing the weekly cash flow forecasts, I'm updating them every week. They'll always want to know, like, all right, what's the TLDR? Like, what are these numbers telling me? Why should I care about our cash flow running out in 3 months versus blah, blah, blah? They always wanted to know that. They never actually looked at the Excel model that I sent them because they trusted me to give them the advice based on that. So we all exist here to provide value to our clients, not necessarily be Excel jockeys. So delivering that value to your clients is a lot more valuable than sitting in a spreadsheet or doing anything like that. And really, when you start leveraging technology, it'll get you 90% out of it, 90% out of Excel. It really is 5 years ago, our goal at Clockwork was to get people 80% out of Excel. Technology has innovated extremely quickly. AI has innovated extremely quickly. Now we're seeing firms are 90% out of Excel because of Clockwork and because of all the other solutions that exist in the space, from Carbon to Ignition to Anchor to all the other solutions that exist. It'll get you out of Excel pretty good chunk of it. But the other thing is making sure, do not have tech bloat. Tech bloat is something that a lot of firms we see are coming, where there are firms now that are like, we are forbidden from buying any technology in 2025 because they went on a buying spree in 2024. And every single piece of technology that they saw, any new shiny AI thing that popped up, they're like, we're going to go and use this. We're going to sign this up. And so tech bloat has become a real thing for a lot of the firms that we see now, where we talk to them and they're like, yeah, we're using this bookkeeping software. We're using, QBO and Xero, and then they're going to start using other GLs. We're going to start using Rippling and Gusto and this. And just from a delivery perspective, there are way more solutions, way more options. And so make sure that your firm doesn't have a lot of tech bloat, that you don't have to like slim down your tech offering or tech solutions that your team offers or your team provides for your client. Make sure that tech is to your benefit, not to your deterrent. Look at the forest through the trees. We are here to provide value, not a race to be the most tech forward firm because we have every single thing tech, 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 tech. It just needs to work. It needs to work for you. It needs to work for your team, and it needs to work for your clients. So super simple. Like this is super tactical, like a tech starting point. You can literally start off a firm. If I was to start my outsource CFO advisory firm again, this is the tech stack that I would run. I'm a little biased on the FP&A and reporting side being Clockwork, but that's why Clockwork exists. But, having a GL, QuickBooks Online and Xero, they're both great. There are a lot more GLs coming out. I know, the industry with all the frustrations of both of them, especially on the QuickBooks Online front. But QuickBooks Online is making enterprise. They're launching enterprise suite for larger clients as well. So they're giving that option to scale, that option to grow. FP&A and reporting, payroll, Gusto. We use Gusto at Clockwork. We use QuickBooks Online at Clockwork. We use Claude. We use Ramp, expense management, other options you have, Ramp, Row, Brex, proposals, Ignition. Ignition is phenomenal company. Anchor is a newer player in the space. Know the guys there. A lot of options there. Practice management, even more options. You have Keeper on the bookkeeping side, Canopy, Financial Sense, Carbon, tons on the practice management side. And then you have the task automation stuff, like literally data analysis. If you want to have an actual, how do I do this? Or how do I build a sales email to go and offer advisory services? Use ChatGPT, use Claude, ask them to help you on the sales and marketing front. It's very simple to actually have those types of services give you some super, super tactical pieces that you can go and start using tomorrow. How do you deliver value? How do you deliver services? Ask ChatGPT, ask Claude. We use Claude all the time. So action steps. This is, even getting even more tactical. We talked about that preferred tech stack. If I was to start my firm tomorrow, this is what I would run. Now let's look at the action steps for you guys to literally implement today, or this week. So the number one thing will be switching to value-based pricing. And I feel like I've beaten this tune way too much, but switching to value-based pricing, having monthly retainers, tiered pricing. These prices are extremely conservative. So we literally we see firms that are doing the bronze, silver, gold, and they range these. These are very conservative. If you are charging usually when partners come to us, and they're charging anything less than $1,000 a month, we kind of already know that they're not necessarily providing that advisory services, or they're dramatically undercharging. And so it's either a shift to double or triple your rates or actually provide advisory services. There's no blending the two. And so having your bronze package being that, and you're spending, most effective hourly rates for each one of these, brown, silver, gold. I mean, the minimum you're going to be at is $150 to $200 an hour, for each one of these segments. So your rates significantly go up. And the most important thing is the value you're providing for your clients is going to fall under one of these three tiers, and make sure you're delivering that value. The other aspect is, don't worry about going to sign new clients on advisory services. Chances are you have gold in your existing client set, in your existing client list. Audit your existing clients. Look at all your clients and see which tier they would fall under based on what you're doing for them already. And look at them and see what tier they would fall under based on the conversations they've been asking you. And if they don't fall under one of the two, think about phasing them out. I mean, we all have clients that we don't really get excited about when they call us. We don't get excited about when they email us. If they don't fit in this type of future version of your firm, do not hesitate to start phasing certain clients out. That that for me was a massive unlock. I had a lot of clients where I'm like, well, if I'm going to lose them and I'm never going to be able to replace them, or I can't charge them enough more, or I would get in my own head about that. And then even with my team members, when they would come to me and they're like, listen, we're working way too much for this specific client, we need to get rid of them or we need to raise the rates. I would always kind of make excuses for them. You have gold in your client list and your clients need you. It's not like you're going to sell them snake oil. They need you. They need the services you provide, the expertise that you have. So don't feel bad about having that conversation with every one of your existing clients today. And you can literally audit your list. Most firms, it's funny, most firms will maybe do that once a year. I do a audit list. When I was running my firm, we did an audit on our client list every single quarter. Every single quarter, we would look at who's doing what we're charging them. I don't care if we signed an annual agreement with them. I wouldn't wait until the renewal of the agreement because chances are scope creep, everything starts out. We provide them more service, we provide them more balance. And those conversations don't have to be dramatic. They can be very straightforward. There is no shortage of demand. There is no shortage of supply on the actual advisory services. So make sure that you're legitimately auditing your clients on a very regular basis. I would not recommend waiting a year or waiting until renewal rates or renewal time to do those. The last thing, super tactically, like anything recurring that you're doing, automate it. Google now, so I don't know if people have used Calendly for links, meeting links. That was a super simple way, and they came out a long, long time ago. Now Google introduced their own version of that, so you don't even have to pay for Calendly anymore. If you use a Google Workspace, we use Google Workspace, and so you can automate literally getting meetings set up. We have a lot of our partners use Loom, Loom video recording. So instead of actually going back and forth with your clients, trying to set up a time to review the financials, we have a ton of our partners that will actually record a Loom video walking through their client's Clockwork account and then send that to the client. And then that's their meeting. That's their monthly meeting with that client. That's their quarterly meeting reviewing the stuff. And then if their client, one, you'll actually see if they viewed it, which is always helpful. And then two, that client will come back to you with more questions. And then that's another opportunity for you to say, okay, great, this is our next tier, or this is what we can provide for you, or this is how we can add the value that your clients are really, really asking for. Now, additional resources. So obviously Clockwork, FP&A, get a demo, sign up for Clockwork, Clockwork.ai. I'm not going to say much about that. What I'm really excited about is we are launching our advisory accelerator, which is basically a cohort program for how do you launch, grow, and scale advisory services. And it's taking the playbook of not just how I did it. Like I went from 0 to 1 in my firm for 5 years and had fortunately a pretty successful business, which allowed me to launch Clockwork. But we've learned from hundreds of firms over the last several years, and we've literally bottled all of that up now. So that is all going to be part of the advisory accelerator. We have our first one being launched in a month, 2 months, relatively soon. So reach out if you would be interested in joining the wait list for that. We're limiting that. So please make sure that you sign up. We're probably going to run 2, maybe 3 a year. But there's a lot of perks for being in the first one in the initial cohort. The other piece is we just launched a Cast Collective advisory group on LinkedIn. It's completely no pitch. There are no vendors. You will never hear a Clockwork pitch in there. You will never hear anything about Clockwork in the actual group. It's not a Clockwork type program. It's literally a Cast Collective that's like an offshoot of the Advisory Accelerator. We want to make sure, and we're adding a bunch of our advisors, a bunch of people that we know in the industry, a bunch of people that are passionate about advisory services, making sure people are providing the best services and best value for clients. That's on LinkedIn. And then literally email me. FH@clockwork.ai. Could not be more simple than that. So for us, we really are building a movement, a Clockwork community. So please, anything that we can help you with, any interesting topics for you, to you, post them in the LinkedIn, apply to the advisory accelerator, or literally just email me if you don't want to have it being out there as well. So now we have about less than 15 minutes left, so we'll leave this kind of last bit for Q&A. I know we already had people send questions, so thank you for everyone who's already sent questions into us via email. And so what I will do, Aaron, do you want to just chat me it, or how do you want to do it? Brilliant. Brilliant. Okay. So pricing for advisory only or bookkeeping plus advisory. So I love when I started my firm, I only did advisory, but one of the largest hurdles was they would come to me and they're like, we need advisory, but first we need our bookkeeping. And then I'm like, okay, great. Your books are a mess. You need to go get bookkeeping. Then they'll go away for 3 months and then they'll come back and be like, we still haven't gotten our bookkeeping. And then they'll give me their bookkeeping and it's a mess because their bookkeeper wasn't that good. So what I ended up doing is literally just offering bookkeeping plus advisory. I offshored, or I didn't offshore, I outsourced my bookkeeping. I hired a firm. I ran my firm in Chicago. So I partnered with a firm that would do all the bookkeeping for my clients and I'd pay them, you know, kind of a pretty low amount. But I'd have them do the cleanup and then the services, but I would just bake that into my advisory package. So it's garbage in, garbage out if books aren't clean. And I honestly, I'm a control freak, so I didn't trust my clients or I didn't trust any random bookkeeper that they found. And so I wanted to make sure that I knew that their stuff was being taken care of the best way possible, because the last thing you want to do when you're doing advisory is have like the cash flow forecast being wrong because of bad bookkeeping. Like that's a non-negotiable. That's an immediate way. So yeah, I would do advisory plus, I think all of that should be lumped under one. I don't think you should piecemeal bookkeeping versus advisory versus this or versus that. It should all be lumped into one. Advice for an established advisory program trapped in Excel. That is a monster. Depends on how many people you have. So if you have a pretty significant team and you have a lot of them that are trapped in Excel, I would pinpoint one, maybe two people that are very tech forward. And I would identify a solution, whether it's Clockwork, Phenomenal, or any other solution. Identify a solution that aligns with what you provide and have those one or two people be the champion of that tech and completely start breaking away and chipping away at the Excel that you do for your firms and or for your clients, and legitimately like have a goal by the end of Q2 or Q3 or Q4 that you will have the majority of your lower touch clients, lower value in terms of the tiers, get them out of Excel completely, and then only leave Excel for the extremely advanced, extremely custom pieces. That's a very deep question, so I'm happy to dive way more into that. Whoever asked that, if you want to reach out. I really want to scale my firm, but struggling to find clients. What do you recommend? Advisory service is not a like if you build it, they will come. But if you build it the right way, if you build advisory, they will come. I never did any marketing for my firm. What I did was I would do a bunch of speaking engagements and I ran the finance literacy workshop series for the two largest incubators in Chicago. So I gave away a ton of information, a ton of content. I was building initially, this is before I started building Clockwork. I built like financial model templates and I would send them. Do not use financial model templates. I'm against them 100% now. But really make sure that you're giving away as much value. Go where your clients live. If your niche is, plumbing companies, like go where plumbing companies hang out. Go where not actually where they hang out. I mean, that'd be cool if you could like go to a bar where plumbing companies go to, but like go where they go socially on Facebook. Put as much free content out there, free kind of stuff, and then ask the people that you know. Ask everyone that you know. We grew my first year, we didn't grow very much at all, but that was all because I was pushing a rock up a hill. But after partnering with the incubators, I went and actually partnered with VCs as well because my core group were a bunch of VC backed companies. So I would go to the VCs and I'm like, hey, I'm an outsourced CFO. Let me build you some of the stuff. And then they're like, oh my gosh, we absolutely need that. And then they would just send me all their portfolio companies that needed that help. So go where you are. If you have like a chamber of commerce in your area and they're active, go become a member of the chamber of commerce. Don't be afraid to really kind of get out there. And it will be one of those situations that if you start asking people and you start building up a really, really efficient delivery service, your referrals will come in pretty heavy, and that'll kind of carry it. Do the tiers include income tax prep? Absolutely not. I never did any tax work as an advisor, as an outsourced CFO. Tax prep, filing taxes and all that, I would literally just do one-time fee. I would charge, I think, like $1,500 or 2 grand, and we would just file all the taxes that they needed. Add-on question. So your example for pricing includes both bookkeeping and advisory. I'm seeing that it makes sense. For current basic double my fee. Yeah, I mean, the biggest thing again is don't get blocked on doubling versus not doubling. Chances are you're undercharging as is. So don't get worried or don't overthink like doubling your fees or tripling your fees. Like chances are your fees probably are too low now if you're doing the bookkeeping stuff. But advisory, don't think of it as a bookkeeping plus advisory. It needs to be, this is my advisory service. This is my advisory package. And this is everything that it comes with and how we can automate it. Granted, you don't have to kind of like put too much pressure on yourself, at the front end. Like try it out, experiment with it, test it for 3 months, test it for a month, test it with a few clients. Dip your toe in the water and see which types of clients you want, which types of clients can grow. That kind of stuff, there no need to over engineer it, think too much about it, do any kind of sweeping changes on the pricing side and on all your existing clients. Try it out, see what happens, see what sticks, and you'll be surprised how many clients you'll be able to sign that you didn't even think needed to sign it. What we've seen is a lot of our partners will sign up for Clockwork, get their clients access to Clockwork, then they'll show them the Clockwork account. Then all of a sudden their clients are like, wait, well, what if we did this? And 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 then it's like, okay, I didn't even think that this client actually had all these questions, but the simple fact that you open that door allows them to think more about it. I want to be super mindful of time, so we have 6 minutes. So, would you add M&A support as another tier, or do you recommend add-on, 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 M&A, add-on? I would actually. I never did M&A. I did M&A for one client, and I was like, never again. And so I actually partnered with an M&A person who specialized in M&A, and whenever that needed to happen, I would just bring them on for a special project, and then that would just be an add-on. And I'd obviously support them, but that was an add-on because M&A is a different beast. I'll kind of pick. On the bookkeeping onboarding side, how do you account for situations where getting invoice bill data into the GL is manual or relies on manual extracts from one various non-API friendly? Do you task your outsourced bookkeeper doing this? Do you explore options? Automation is easy, the easiest way to handle if you're trying to just do a bunch of cleanup on the like literally just from journal entries, automation, set up some sort of automation around it. Like you can literally use QuickBooks Online's automation to do that stuff, or just outsource your bookkeeping. Like there's no there, there are tremendous amount of resources in the Philippines, and they're all phenomenally talented teams. Outsource a lot of that kind of stuff. So don't think too much about that. And then do you account for this in the pricing model? Absolutely. So I would every single engagement, I would make sure that the client knows for the first 3 months that is based on the initial estimate. And then at the end of 3 months, we have, and I schedule it before we even start, and I have a pricing scope review call. And I will look at everything that I provided for them, everything that I did for them. And at those 3 months, that client knows that I will come to them with either your bill goes up or your bill stays the same. Because generally it'll never, ever, I think literally never, ever go down. But that was always the thing. I would do 3 months, right? Because you never really understand until you're in it for at least 3 months. So that was kind of the biggest lesson learned on that one. Um, Really want to know how to implement these services, how they go along with my standard bookkeeping, what exactly they are. If you really want to know how to do this, join our advisory cohort, like literally join the cohort, join the Cast Collective, join, like email us. We will give you we have what's called the Champions Toolkit. So Clockwork, our partner program is called the Clockwork Champions Program. And it's champions because we champion you as much as you champion us. We will give you a toolkit that breaks down every single aspect of advisory services, from the tiers to the services under the tiers to meeting agendas under the tiers to how your client deliverables look, how often you should meet with clients. Like that's not like a pay to play kind of thing. You literally email us, we'll give it to you. So do not overthink how do you implement them. Use us as much of a resource as possible. Pricing is always intense, so that is a good one. Pricing is intense, but often it's not super dramatic. I think the biggest thing for pricing is it doesn't have to be dramatic. A lot of times, us as finance and accounting professionals, we overthink it and we're in our own head about it. So really don't worry or think too much about it. Um, I would say pricing is my biggest concern. This would be the last one I'll hit. Pricing, it seems like pricing and implementation are always the two biggest things. One, the final thought I'll leave you on is you're probably pricing too low already. And that's probably one of the reasons you're thinking twice about it, because you're like, oh my gosh, how am I going to go from 500 to 1500? Really not that big of a deal, because you're providing a tremendous amount of value. When I ran my firm, I took a CFO position, CFO, COO position with one of my clients. My pay was $200,000 and I had 5% of the company. When you go and tell a client that you're going to charge them $1,500 or $2,500 a month, their alternative is paying someone who's experienced $150,000 to $250,000 base salary plus ownership in the company plus bonuses. You're not charging enough. You will not be charging too much for a very long time. So do not get concerned about pricing. And if you know what, those clients don't want to pay you $2,500 for you to keep them out of jail with their clean bookkeeping and provide them how they can improve revenue by 20, 30%, those probably aren't the right clients for you. That was my biggest learning. I ran a firm and I barely made any money for 2 years because I was too hyper fixated on that. So that brings us to time. Thank you guys all so much for joining. This was awesome. Please shoot us notes, join the advisory cohort, join the Cast Collective on LinkedIn, shoot us an email, and we absolutely would love to hear from you. Thanks, everyone.